Kyle, welcome to the show, man.
Ellis, great to be here. Good seeing you again.
Really, guys, I've known Kyle for a long time. He's been, I guess, you call you a pillar, man. You know, you're getting your veteran status in this industry, dude. You know, as
No,
a
thank you.
multifamily investor.
Appreciate that. It's been a long road, but it's only been, 5 years. So I got a long way
Yeah.
to go still, for
5 years
sure.
in this industry, man, it feels like 15, dude. You know what I'm
hmm
saying? Like, you learn so much. I mean, we're under contract on a deal right now. I told you the last 4 months, and I swear, man, I feel like I've gotten like my doctorate degree in like commercial lending finance, and like,
Yep.
how many deals have you guys done in 5 years? I mean, how much have you learned just in that?
Yeah, I mean, we've just over the last 12 months, we've done 8 deals. In those 12 months, I just learned so much. We've done
Mhm.
15 deals overall. But yeah, every time you do a deal, you think you've got it nailed and you learn something new. So
Yeah, yeah. You know what's interesting to me? I'd love to hear this in your perspective. Like, we started going after some larger multifamily transactions. I've just been amazed at, and because you came from you broke into this space, not didn't really come from a real estate background, knowing a little bit. Maybe you can explain that. But I just would love to hear what now that you're kind of operating at this higher level. I've been so amazed at just the level of sophistication, the amount of capital, and how the need goes from when you're in the single family space. It's like, where do I get my next dollar? To like in this arena, it's like there's so many dollars. It's almost like you're just structuring this like it's like capital stack architecture. I'd love to just explain to our listeners a little bit how you came into this space, and then give me your perspective. Now that you've done 15 deals, doing large multifamily transactions, how would you describe what it's like to begin to do large multifamily from a financial capital stack standpoint?
So I got into this field by Googling, Googling real estate investing.
Yeah.
Essentially, I was in the golf business before. I was in the golf business for 21 years. Always thought I'd be a W-2 employee, and I just got burned out of it. And back in 2015, I started looking for just another career, something else to do. And I didn't want to go back to working for someone else. So I looked at so many different things, starting an Amazon store, buying an existing company, starting a franchise. And none of those things really appealed to me or ever worked out. And I had been investing in real estate since 2010, buying single family homes. And one day I just decided to Google real estate investing, and up popped a course for $1,000 for buying apartments. And my mind was kind of at that point, thinking I can't buy apartments. So I took the course. 3 weeks later, I was sold. I fell in love with the business model, and 11 months later, I left my job to pursue this full time. And that's kind of the end of the story there. So that's how I got into real estate. And my first deal was a 42 unit, and last week we just closed on a 232 unit. That was about $38 million. So we've been able to
Wow.
scale. And to your second question, as far as the capital side, it's definitely a different game for sure. Like you said, multifamily versus single family. The thing that we're dealing with now is trying to figure out who our best avatar is for the capital. There's so many different sources of capital. There's so many different ways that you can structure it, whether you're going to a family office, you're going retail, raising 50 grand per person, you're going with pref equity as a piece of the capital stack. And then there's institutional capital as well. So there's so many different ways to play, and each one of those ways requires a little bit different knowledge and a little bit different structure to your deal. So as you grow, it is a challenge or something that you need to solve for as far as who your capital is going to be.
Have you guys done work with any institutional groups, family offices, or pref equity yet, or just retail investors?
Yep. So we've done 3 deals with pref equity, and hopefully, knock on wood, exiting our first with that pref equity next week.
Hold on a
We
second. You explain what pref equity is and kind of what does that even mean? And is that a service? Like some folks may not be familiar with what is pref equity.
Yeah, preferred equity is essentially sits behind the lender and mezz debt, if you had mezz debt on it, and it's essentially treated like another loan, but it's called preferred equity. And so a group will come in with a single check, just kind of like a family office. It could be a fund of funds, et cetera. It could be different sources of capital, but they're coming in with 10 to 15, 20% of the capital stack, and typically they look for lenders getting to 65 to 75%, and they can take you all the way up to 85 to 90% of the capital stack. Probably a little bit less where we are on the market today, but over the last 2 years, that's kind of what it's been. And they look for a certain type of return, and this is completely negotiable, and it ranges all over the board. So I'll kind of give you what we do is we pay a current interest rate, essentially, between 6 and 8% during the whole period on a monthly basis. And then on the back end, they also get, another 5, 6% on the back end. But the good part about that is that they're capped in their total return. They don't take advantage of the upside like the LP investors
Right.
do.
Right.
So the risk piece of that is, these pref equity groups do want some type of management control in the operating agreement. So getting loans done, you need to find the right lenders to get that done. You're obviously taking risks that if you're not managing the property, they can take it over. And then they sit ahead of the LPs. And typically, we're pari passu on them, which means we get paid dollar for dollar on the first 7%, but everything after that, we've got to make them whole, including the return of their capital before our investors actually make any of their profit. So there's a lot of different moving pieces. And the other thing we like about it is the pref equity groups we've worked with don't take advantage of bonus depreciation. So
Hmm.
all that bonus depreciation can be moved over to our limited partners, therefore getting them 100+% on their bonus
That's huge.
depreciation. Yep.
That's huge. So let's talk about just the way you've navigated this space and grown your portfolio. I've known you for a while, and you formed a couple of teams and partnerships. I asked you before the show, man, why don't you just go on your own? Like, what is it about this industry and partnering with others that's helped you accelerate? And maybe I just would love the good, the bad, the ugly, man. Like, let's talk about that. Like, let's get into the good, the bad, the ugly of partnerships. And I talk a lot about that. I have 3 partners. I wouldn't be here without them today, but it's not all been roses. So like,
Yep.
let's get into that, man.
Yeah, partnerships I think are a necessary, I wouldn't call them an evil, but they're necessary in this industry, in my opinion. As you grow, what we now have is a company, right? We're not a small business anymore. We're not mom and pop. We're a company. And with a company, you need team, whether that be a C-suite, whether it be equity partners, or people underneath you. But the reason why I went into partnerships is just, I have an abundance mindset, and I think the sky's the limit when you have the right partners, right? The big thing about adding partners is just making sure that you have the right strengths and weaknesses, and you play off of each other, and you complement each other's skill sets. And so, going back, looking at, I would spend more time now making sure I'm partnering with those type of people, just so they complement me and I complement them. The downside of having partnerships is obviously you have partners that you have to agree on things to move the business forward. And a lot of times, if you don't have the right systems or processes in place, you can get stuck arguing about very small details that really in the scope of things don't really matter, right? So you're not the only one making the decision. So that's one benefit if you're going to do it all on your own. But I truly believe that at least in this space, it's really difficult to grow and scale your business to where we want to get it without having partners.
Yeah. What have you found, like, in your partnerships, that you have a really clear role? Like, and is there some, you know what I'm saying? Like, and is there someone that is kind of in charge of making decisions, or you guys make those together? Like egalitarian versus complementary. Like, I don't know if that's language you use, but how do you guys kind of move through that process of like the big decisions, what deals we buy, et cetera,
Yep.
in your process?
We're going through this right now. So the original way it was set up is it's myself, Stephen Louie, and Jenny Gu, and all 3 of us are equal partners in the firm. And we meet in person for an entire day on a monthly basis, but we also meet on Zoom calls several times during the week. But monthly is where we kind of hash out the big things, and we take a vote on certain things on whether we're going to move forward or not. And then, majority kind of rules. But we are also in charge of different buckets. So Steve is mainly in charge of investor relations and capital raising. I'm mainly in charge of front-facing asset management, acquisitions, and underwriting. And then Jenny is also in charge of some asset management and then our academy. And so we're not in 100% clearly defined roles because we kind of cross over, which is actually something that we're going through right now. We're hiring a coach to kind of help really solidify those things, because I do think it is important for partners to have their buckets and focus on their strengths and then just go kill it in that area. It's easy, or it's difficult, I would say, when you're first starting out, to not want to have your hands in everything. But as you grow, you have to learn how to let go of some of those things and trust other teammates, hire other people below you to manage those things, so you can focus on the higher level, bigger picture items that generate income for the company.
Again, with your experience, how do you avoid, like, what if someone's like, hey, and because a lot of us, man, we get in this industry, we want to go do big deals, we kind of find someone who's like similar to us, it's like, oh, they want to go do big deals. Let's link up and let's form a partnership. Like, walk me through maybe some of the things that, given your experience, you would maybe have stepped back in the beginning, asked these questions, or maybe even structured things a different way. What are some tips? Just let's end this kind of conversation on partnership, on counsel to those who are maybe early in their business and are really looking to form partnerships to grow their portfolio.
Yeah, I've been lucky enough that all my partners have been, amazing people. It's just good character in general, right? So I haven't had a terrible relationship with a business partner. However, I would say to get to take a little bit more time to get to know them and their family, not just on a business level, but a personal level too, because these are really like marriages. I mean, even if
Hmm.
you're just going to partner someone with on a one-off deal, or partner with them as an entire company, I mean, you're in this marriage for 5+ years and you're dealing with, a lot of different things, including personal things that each of the partners go through. And I think that's a lot of the stuff that people don't realize is, what's this person's personal life like? Do they work hard? Do they like to take a lot of vacations? Like, what is the overall vision of not just their business, but their family life as well? Because to me, it's all integrated and it really does start back to your personal life and your family and your goals there. And so you need to make sure there's alignment on that side as well, in order to get the best out of your business.
Yeah, no, that's great, man. Dude, let's just talk kind of in, man. I want to hear, you guys are in Phoenix, right? It's where you're buying most of your deals.
Phoenix and Tucson.
What's the future of Arizona, man? I mean, that market is, what have you seen just even over the summer with interest rates going up? Give me a little insight on kind of what's happening there in Arizona. It's one of the hottest multifamily markets probably in the last 24 months. I would say it's competing with even some of the, I mean, it is probably one of the most competitive multifamily markets right now. What's happening there?
Yeah, it's definitely softened over the last 4 months, and it felt like it happened overnight, and I think that's probably the same for a lot of markets when the interest rates went up so dramatically, and pricing expectations are just not there between the buyer and the seller. They're just not meeting there. So there's a lot less deals on the market, I would say, right now. More off-market stuff that you can get, people trying to sell kind of under the radar and get at least part of the price that they want. I think expectations are still a little bit too high, but cap rates have definitely decompressed out there. But for me, I think it's a short-term thing in Arizona. From a fundamental standpoint, the market is strong. Unemployment's strong, wage growth is strong, business, pro-business, building out infrastructure. All those things are aligned. Population growth. So everything you want to see in a market from that side of things is very strong. But obviously, interest rates are going to have an impact on cap rates and
Hmm.
on pricing. And so I think right now we're still in that area of where we're seeing the adjustment. Everyone's still trying to fill it out. You do have a lot of investors with pencils down, meaning they're not offering. So I think that there could be some good buying opportunities here in the next couple of months, especially towards the later half of the year. When you think about bridge loans that were being signed up 2 years ago, 3 years ago, these are starting to come due. And 2 or 3 years ago, there were not rate caps that were being
Hmm.
forced on these buyers like you are now, where you have to buy a rate cap. And so the rent growth will probably save a lot of those people over the last 3 years. I mean, we've seen 30+% rent growth in the Phoenix market alone. So that's been a positive. But I do think that bridge loans are coming due and they're going to have to sell. So there could be some opportunities toward the later half of the year. But I do think it's going to be a little bit short term. Like I said, the market's strong, and with interest rates where they are now, they're already saying that interest rates could be coming down again next year. So
Yeah.
we're kind of in a wait and see mode. We're not aggressively buying. We're still underwriting deals so we can keep tabs on what the market's doing. But it has softened, and rents and occupancy have started to soften as well, which is was predictable, I think. I mean, when you're talking about 20% rent growth in Phoenix, you're not going to continue doing that for 3 to 5 years, right?
Right.
So naturally, it's going to start creeping back into the single digits, which is probably a good thing because it's just not sustainable.
And is y'all's model like an exit? Like you're out in 3 to 5 years? Would you consider recapping or refinancing a deal and holding it? What's kind of your thesis on what to do with real estate?
Our general rule of thumb is 3 to 5 year holds, and then take a look at where the market is and then evaluate. And it could be either a refinance or a sale. And there's a couple things that go into at least my thought process on it. Is if it's an older product, we've purchased some 70s product and even a little bit older. I'm not going to recapitalize those at all. They're just too old. I'd like to get them off our portfolio and sell them for a profit and, move on from that business plan. Now, we also have product that's 2000 build. That's one that I would definitely recapitalize because it's newer, and it's just built for a longer term hold with families who live there, 2 and 3 bedroom units. So something like that I would take a look at and hold for longer term. So we have both kind of business plans that are available to us. And then also, obviously, you're going to take a look at the market and the outlook and how that individual market's looking versus how the economy is looking as well.
And you guys kind of at Vertical, you're full suite now. You're owner operating. Do you guys do any co-GP type stuff or allow co-GPs to come work alongside of you? How are you structuring kind of your company?
Yeah, so we do allow co-GPs to come in. Our requirements are probably a little bit higher than they used to be for sure, but we always look for partnerships and we want good partnerships. You can't do everything alone. And, whether it's partners in the company, like I said, or partners as a co-GP, we always look for those. We are now in the point where we'd like to be in that 60 to 70 million dollar space, and right now we're in that 30 to 40 million dollar space where we closed a couple deals in there. And to grow into that space, you definitely need partners, right? Whether it's from a net worth and liquidity standpoint or a capital standpoint. So we're always looking for partners to grow in the space. And then as far as our internal team, the only thing that we're not vertically integrated on is property management. We still outsource that. We're thinking about bringing it in-house, but it's not been something that we pulled on yet. But we do have asset management and construction management in-house.
Kyle, what's your 5, 10 year vision, man? You're going to still be, do you want to be buying deals till you die, or is this a path towards financial independence and do something else? What motivates you?
Yeah, I think it's building out the company, and really I'd like to build a self-managing company. I'm in a strategic coach. I'm not sure if you've ever heard of that, but it's put on by Dan Sullivan, and it teaches entrepreneurs how to build out a self-managing company. And so I want to be doing deals until the day I die. Really, I love this business, but do I want to be the one in the day-to-day business every day? No, I'd love to be, on the board of directors, kind of overseeing our C-suite of executives that run the company and still have a hand in certain things. But I just love seeing this company grow, and bringing on good people and then helping others get started in this space too. So I think I'll be doing this for the rest of my life.
I love it, man. I love it. It is definitely one of those businesses. Like if you can build a business, I think that's right. Like figuring out how to build a self-sustaining or self-operating company where because you can't. I mean, you can still buy deals. I mean, the great thing is as you buy more deals, it gets easier to buy deals because you have bigger track record. You can have access to more capital. Institutional money is easier to attract. You get better terms in terms of financing. So it's one of those things of like it is a veteran's game because it gets easier the bigger you get. The hardest time is right now, right? When you're 4, 5, 6 years into this business. So really cool, man. Well, this was really fun. I learned a ton about partnerships. I love what you guys are doing over at Vertical, and just it's fun to see your growth. So you guys do a conference, right? Or you have an in-person gathering that you do. Can you talk about that?
Yeah, it's called VSV Con, and we just had our first one here this past June, and we are putting on another one in April. So that's coming up, and it'll be in Phoenix, Arizona. And it's just getting together 300 to 500 people. We're shooting for 500. Last time we had about 250, so we'll have 300 plus people there. Great speaker lineup, education about how to get started, but also in-depth kind of updates on where the market is and how to get your next deal and where multifamily is going. And then we also do a bus tour as well to all of our properties in the Phoenix market. So you get to touch and feel our real estate and see the business plans, talk to the property management companies, which is a huge plus. And it's really invaluable to see the business plans while they're in action.
Yeah, that's huge. Is that just for like your investors, or is that like for co-GPs or coaching? What's the point of the bus plan? Is that to attract LPs, or kind of what is your thought there?
Yeah, so it's really for anyone. So anyone who attends the conference will be invited to the bus tour. And so, we had 200 plus people at the bus tour walking through our properties. And it's for multiple reasons. For an LP to come and see our business plans in person, obviously to see how we execute, ask the right questions. But it's also, we've got an academy in Phoenix where we teach people how to get started. And anyone who wants to get started, the best way to learn is hands-on training, and that's what we provide there as well.
Yeah, love that. Well, man, I really enjoyed this. How do folks get in touch with you guys? Where to go to learn more about Vertical and even that event, man?
Yeah, absolutely. So if you go to verticalstreetventures.com, all the information about our team, how to contact us, and our VSV Con in April is on there. And then my number is right up there, 562-833-5010. If you want to shoot me a text, I'm happy to talk.
Vertical Street Ventures. Guys, go hang out with Kyle. Heck, I'm in San Diego. I might even be over, and because April's getting close to getting hot, man, but
Not
it's not
quite.
quite there.
That's right. We did it in July this year, and man, it was way too hot. On the bus tour, it was 108 degrees, so we said we got to move it. That's why we
No
went to April.
way. Here it is right here. I love that, man. April 28th through the 30th. So create financial independence pathway like this. This is a nice website you guys got.
Thank you.
That's the squad.
That's we're updating our website
There.
now, so it'll be
At least some
updated.
of
That's
them.
the squad there. Yep.
Yeah, this looks good, man. Excited for you guys. Well, hey, man, appreciate your time again, everybody. If you enjoyed this, let us know in the comments, and we will see you next time. Appreciate you.